Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Tuesday, 9th December, London Open Prep. Two themes set the tone. The Federal Reserve decision tomorrow has markets cautious and the US dollar softer, while policy divergence in Asia-Pacific, led by a hawkish Reserve Bank of Australia and nuanced signals from Japan, is driving currency moves. Starting with macro and policy, the Fed is front and center. Gold and silver are marking time in tight ranges as traders wait for clarity on the path of rate cuts. And the euro and pound are edging higher against the dollar on expectations of a dovish tilt. In Europe, stronger German data is adding a little support to the single currency. In the U.S. energy space, the nascent fusion industry is asking Washington for multi-year funding and infrastructure support, pitching it as a strategic investment in a difficult but promising technology. Asia delivered the overnight action. The Reserve Bank of Australia kept rates on hold, but Governor Michelle Bullock struck a firmer tone, saying the outlook is for an extended pause or hikes, and that cuts are not on the table for now. That helped the Australian dollar rebound after an initial wobble. In Japan, Governor Kazuo Ueda said confidence in the Bank of Japan's outlook is increasing gradually, and signaled he would adjust the degree of easing if the economy and prices evolve as forecast. Prime Minister Sanai Takaichi stressed the BOJ's independence and said the government stands ready to take appropriate action on foreign exchange if needed, a reminder they are watching yen moves. The yen remains choppy, and there's added sensitivity after a strong earthquake in the northeast raised brief concerns about disruption. Turning to markets, the tone is broadly risk-stable. The euro is firmer, the pound is holding modest gains, and the Australian dollar is leading in the majors on that hawkish RBA bias. The yen is mixed, softer against the euro, while officials' comments hint at a floor if volatility picks up. In emerging markets, the Indian rupee is firmer as foreign outflows from equities cool, nudging USD INR lower. Precious metals are range-bound into the Fed, and oil is a touch softer in quiet trade. On the data slate, it's a light European morning beyond the German trade balance. In the U.S. session, watch the ADP employment report and job openings, both offering a read on a cooling labor market ahead of the Fed's guidance tomorrow. Central bank speakers today include the European Central Bank's Joachim Nagel, BOJ Governor Ueda, Bank of England members at the Treasury Select Committee, and the Reserve Bank of New Zealand's Governor Bremen. Next week brings the U.S. jobs report and inflation. What I'll be watching today, the Australian dollar against the U.S. dollar, looking for an uptrend to persist if the RBA's hawkish bias keeps rate expectations elevated. The euro against the dollar, biased higher if Fed cut bets hold and German data momentum lingers. The pound against the dollar, a gentle uptrend while the U.S. currency stays on the back foot, though UK consumer softness is a watch-out. Dollar-yen, two-way risk, with any fresh job owning from Tokyo capping upside. Gold and silver, likely to stay range-bound until the Fed. And dollar-rupee, with scope for a drift lower if equity outflows continue to ease. The takeaway, markets are leaning into a softer Fed, but staying selective, as policy divergence from Sydney to Tokyo and a cooling U.S. labor backdrop keep currencies and commodities on a short leash. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.